Hey, what's going on, you guys? Marcos here. So today I want to talk to you about a brand new refinance program that just literally got released a couple of weeks ago, back on June 5th. And this program is going to open the doors for a lot of people who haven't been able to refinance and obviously take advantage of the extremely low interest rates over the last year and a half or so. So if you have been trying to refinance, you got turned away because maybe you just didn't make too much money, or maybe your credit scores were not good enough, then listen up because this might be the solution for you. So now today I'm going to be talking to you about the Fannie Mae RefiNow program, and this is a brand new initiative that allows borrowers who are considered lower to median income to be able to refinance and obviously take advantage of the lower interest rates, which in turn is going to help you save money on those monthly payments. So now in this video, I'm going to be covering up who this program is for, what are some of the things that you need to qualify, and also if this is something that you should be looking into for yourself so that you can make the best financial decision for you. All right, so guys, qualifying for this loan is actually really simple. Now, the biggest thing is that this loan is actually geared for the lower income to median income borrowers. So there is an income cap of no more than 80% of the area's median income. And if you don't know what your area's median income is, then link in the description box below. Just check it out, put in your zip code, lets you know what the median income is, and compare it to whatever your income is going to be. That's how you basically qualify. It does have that income limitation. The second biggest thing is that this refinance loan is literally for borrowers who already have a Fannie Mae backed mortgage. If you have a conventional loan backed by Freddie Mac, you won't qualify. If you have an FHA mortgage or a VA or USDA, you won't qualify either, or a jumbo loan, obviously, or any other sort of mortgage, not called a Fannie Mae mortgage, you won't qualify. Now, you might not know if you have a Fannie Mae loan, and that's completely fine. Lenders are not supposed to tell you. Honestly, they don't really tell you if you have a Fannie Mae loan. Nobody ever asked. So if you want to find out really quickly if you have a Fannie Mae backed mortgage, then check out the description box below, because I'm going to be linking this link on the website so that you can go ahead and put in your information really quickly. And guess what? Nobody has to check your credit. You don't have to talk to anybody, guys. It's extremely simple. In about 3 seconds or 5 or whatever, however quickly you actually type, you will actually be able to find out if you have a Fannie Mae backed mortgage. It is that simple. Link in the description box below. Now, besides that, you need a credit score of at least 620, which is actually really low for a conventional loan. It's actually crazy. And in a debt to income ratio of no more than 65%. And that's honestly the biggest thing, guys. A lot of people get turned away from refinancing. They have not been able to take advantage of a refinance because debt to income ratio is always a big thing, especially when it comes to lower income borrowers. And that's honestly, once again, one of the parts of the initiative is to help the lower income borrower to be able to take advantage of the lower interest rates. It kills me, guys, when I try to help somebody personally. I'm trying to help them refinance their homes, and they're looking to save a lot of money on their monthly payment, and literally they can't qualify because they don't make enough income. Now, that's basically what you need to qualify. On top of it, no missed payments over the last 6 months. If you missed a payment, then no more than one missed payment in the last 12 months. Let me stop that phone call real quick so we can. All right, so now where were we? Okay, yeah, got it. So last but not least, you got to have at least a 3% equity position in your home. Honestly, that's really simple, especially with values going up like crazy over the last 12 months. Like pretty much any home has gone up in value insanely in this crazy market. And honestly, it doesn't matter where you are. You can be in California, you can be in Texas, you can be in Idaho, you can be in freaking Alaska. You can be just pretty much anywhere. And I'm sure your home's value has been going up. So Fannie Mae does require at least a 3%. All right, so why should you be thinking about refinancing right now? Obviously, lower interest rates, guys. If you're paying a higher interest rate, and to me, if you have anything over a 3.75%, or you're paying PMI, that private mortgage insurance, when you bought the home or you refinance, you have to take on that PMI, then you may be able to get rid of it because your home's value has been going up a lot, and you might just have enough equity to get rid of it. So if you have a little bit of a higher interest rate, and obviously today the rates are much lower, then this will help you save some more money. Okay, so that's honestly the goal of the program, is to help you save money on a monthly basis. This loan doesn't really help you get any cash out, or it doesn't also help you get a lower term. So going down to like a 20-year mortgage or 15-year is not possible. This is not what it is for. But if you're trying to save money on a monthly basis, then this might be the answer for you. And in other videos in the past, I've gone over how you can actually save your money monthly by refinancing and taking those savings and applying them back into the loan, where obviously there are no prepayment penalties. You're financing at a much lower interest rate, and that way you may be able to pay off your mortgage faster without honestly taking on a much shorter term note. All right, so now I just want to cover up some of the biggest questions that a lot of people will ask me about this kind of program. And the first one is, are there any closing costs by refinancing with this program? The answer is yes, guys. There's always going to be closing costs when it comes to getting a mortgage, and every state is different. Some states refinancing might cost a little bit more money than other states. If you have to get an escrow account, that will obviously increase your closing costs, yada, yada, yada. At the end of the day, guys, you want to make sure that the juice is worth the squeeze. So if you are lowering your interest rate low enough so that you are breaking even on these closing costs really quickly, then it makes sense. Or obviously, you're lowering the monthly payment so that it makes your life a lot easier. It always makes sense. Sometimes you may not need an appraisal. And if you do have to have an appraisal, then actually this is kind of cool. They will actually credit your appraisal fee up to $500 at closing, which means that if you pay for an appraisal to get this whole deal done, then it'll get credit at closing. So it's like, they pay for your appraisal, so to speak. All right. Now, the other thing is that you still do have to show that you can qualify for it. So just because this is sort of for folks who have a lower income, it doesn't mean that there are no other qualifications. So you do want to have, good credit scores. Obviously, the better your credit scores are, the better the interest rates will be always. But honestly, one of the things that I've seen with this program lately is that the interest rates are actually lower than interest rates for a regular conventional loan. So for instance, somebody who's just looking to refinance and they're just going to get a regular conventional loan, not this whole RefiNow program, that those interest rates will be higher comparing a 30-year basis than this whole refinance program now. So that's actually really cool. And, with lower interest rates, obviously you're going to see much higher savings. Other common questions that you might have is, can I add somebody into this mortgage? The answer is yes. Obviously, if both of the applicants are making too much over that 80% of the area's median income, then you might not be able to qualify. So make sure that you want to talk to a mortgage lender about that. Also, if you're getting divorced and stuff like that, you might actually be able to take advantage of this loan as well, just like a regular refinance. If you got to get rid of somebody on title, and that could be also one thing that you may want to think about. Or maybe you bought a house with somebody and you are trying to just kind of like put the mortgage on your name only, then you should be able to get that done too. So anyways, guys, those are sort of like the biggest questions that I get. We talked a little bit about the fact that you cannot get any cash out from this. You can do like home improvements. You really can't get any money back on this kind of deal. This is just literally to help you save money on a monthly basis. The lender has to help you save at least $50 a month on your monthly payments. Okay, that's basically it, guys. Hopefully this whole video was able to cover up some of the biggest things that you might have heard about, thought about. You probably didn't even know about this program. Now you know. Talk to a mortgage lender about it. I think it's a really cool option. I know it's going to be able to help a lot of people out there that have literally been turned away in the past because of those income situations. And honestly, I do wish that Freddie Mac also did something like this. And that way, that will open the doors to all the other people that have a conventional mortgage to be able to take advantage of these lower interest rates. And honestly, guys, definitely always stay on top of your mortgage, because it is typically the biggest expense of all of us as consumers. The mortgage payments will typically be the biggest thing, obviously, if you own a home, and that will probably be the largest loan that you have, except with some people that have a lot of money on student loans. Hopefully that's not you. But whatever the case might be, this will hopefully help you out. And that's really it, guys. Thank you so much for watching the video. Let me know what you think about it. Any questions that I didn't really cover, put them in the comment box below. More than happy to help you answer those questions, give you my knowledge, whatever the case might be. And as always, subscribe to the freaking channel and give it a like. All right. And honestly, share this video with somebody that you know and somebody that you think will be able to be of some help. All right. That's it, guys. Thank you so much. I'll see you next one.